Hey guys, welcome back to the channel. Today is October the 11th. It is Tuesday morning. We're pre-session here, and I want to discuss with you today a little bit about my game plan and what I do each morning when I first sit in front of my charts and preparing myself for the session at hand before it opens up. What it is that I'm actually looking at from my end on my charts, or whatever the case is. How do I get myself prepared to start, trading? So I want to walk you through that game plan in a sense. Which is, it's not relatively a long process. It's just we really want to try to determine, the direction of the market. And then once the market opens up, we want to kind of follow suit and trade along with the market in a sense. But anything can change or happen, even pre-session. It could be economic news events, a news event that happens that changes, the market starts moving and then changes the direction of the market, from your outlook of what you may have been trying to prepare yourself for once the market opens up. But typically speaking, from looking at a higher time frame, say for instance my 60 range chart, the one you see right here, this is the 4-panel chart that I have, a layout I have here with a 60 range, 24 range, 12 range, and then the 4 range. So this is pretty much what I'm looking at during my trading during the trading session. And most of my primary focus is placed on the 12 and the 4 when I'm actually actually trading during the session, because like I said, pre-market, I'm already looking at my 60 range. But one chart that I do not really bring into the fold and talk too much about is a daily chart. And that is one that I actually look at, which I don't, haven't showed really in the videos. I'm sure most of you guys probably take a look at a daily chart or a 4-hour chart or something. But I do look at the daily chart as well, because it actually shows you, further out, get a big or broader look out towards the horizon, if you want to say, trying to figure out over last few days, last couple of weeks, months, whatever the case is, depending on your style of trading. But it just kind of helps me see just over a period of time what the market is really trying to accomplish. So we'll take a look at the 60 range right now, and I have relatively, I think, a year's worth of data loaded to that chart. So it's showing me 1 year worth of data on the chart. I'll show you that. It's right here. So, and look at the daily chart. This is, I think it's going out from October last year to October this year, of course. And, pretty much since the beginning of the year, we were bearish, right? Okay, we just see price making lower lows and lower highs. And, up until pretty much, if you look at how things are unfolding or have unfolded, just making lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then price pushing down. Now, each one of these candles represents one day, of course, right? Because it is a daily chart. Again, it's 365 days loaded to this chart. So, at the beginning of this month, what I'm going to talk about is, my strategy in a sense, and showing you how I actually use it. It's very simplistic strategy. Anyone can use it, It's just basically a pullback strategy. Using paired charts, okay, and you're looking for rejection, pretty much, But the key thing we're always looking for is a pivot or a turn in the market to where price is breaking structure, and then at that point, you just scale them down to a lower time frame chart, waiting for a pullback to a zone. And if you've been following my channel, I trade supply and demand. Okay, I trade this simple strategy surrounding supply and demand. So if you're a newcomer today, it's your first time watching the video, take the time to watch the content, watch the video in full. Go back and watch some of the other videos. I have a mix of videos on my channel, a lot of them covering my live recorded sessions where you can actually see me trading during the session, whatever the case is, and I talk about the trades, as well as I have discussion or informational type videos talking about the markets, talking particularly about the the ES futures. But this strategy of the strategy I actually use to trade, and the one that I devised, you can trade it. Doesn't matter the market, whatever market it is. It does not matter. Okay, it doesn't matter if it's forex, options, stocks, because it's all centered around supply and demand style trading. Okay, again, I'm just basically looking from a very simple approach of trading around supply and demand, waiting for price to tap into an area of supply and demand. Okay, then I scale down to a lower time frame chart, look for price to pull back to that area, look for the rejection, and either go short or long. Okay. So again, this is the daily chart, and looking at this today right now, what I'm seeing, if I'm looking at it right now, which I do each and every day, and then I go down to my 60 range chart. So I kind of use a top-down approach. So my game plan is always starting from a higher time frame, stepping down, kind of saying, okay, daily chart showing me this, the 60 range chart showing me this, and it puts me or helps me define a kind of a bias or direction of which direction I should be trading, okay? Because you always want, like they always want to say, they always say, follow the direction of the market, trade in the same direction of the market. That's the best thing to really do, because then that way, if you're waiting, say for instance right now, price is, say for instance right now, price has made a low right here, okay? We made a low here, price made a pullback here, made a low here, broke through this area of support right here. But what do you see has happened here in the last couple of days? Price has broke this area of resistance right here, broke structure back to the upside. So if it broke structure, okay, I'm going to show you how I do this on a lower time frame chart, but I'm just showing you this off of a higher time frame. If it broke structure right here, now to me, I would say, okay, price is a little bullish right now over the last few days. And basically what you're doing is wait for price to pull back to a certain area to look for a trade, but not off the higher time frame chart. I'm just telling you, if I'm looking at my higher time frame right now, I say, okay, well, price broke structure here. Once it broke structure there, then it must be bullish. Your mindset and your bias could probably shift from all this time when the market was just making lower lows and lower highs to where you may be looking for short entries. Now maybe you're looking for long entries because prices broke structure here, okay? Now, we have pulled back here, okay, but we still have not broke below this low here, So to me, I possibly would still be looking for long entries, looking at the higher time frame, the daily chart, and kind of depicting, okay, the daily chart showing me that the market is kind of bullish because it broke structure here. It has pulled back. We haven't broke this area here, so maybe possibly still be looking for long interest, okay? So now let's switch over to the 60 range chart. So this is what I do each day, okay? So the higher time frame, the daily showing me that the market is I should be looking for long entries, more likely, or at least we're in a bullish direction in a sense. But if we look at the 60 range chart, I don't trade minute-based or time-based charts. I trade range-based charts, okay? And people always ask me the question, well, why? To me, it's just a preference. It's not so much, no particular main reason that has anything to do with the actual market in itself, or based upon my, based upon anything else really. It's just the fact is, I started out using range charts. I like how clean they look to the eye, and they're just easier for me to the eye to read. Okay, now whoever works for you works for you. If the minute works, if the time-based charts work for you, trade that. The tick-based charts work for you. It's just pretty much how you train, have been trained or trained yourself when you first started learning to trade or whatever the case is. You stuck with it, right? So it's just, to me, I just like range charts because they look cleaner. The setups are cleaner for me. I can see them just a lot visually better, okay? But anyways, now we're looking at my 60 range chart, okay? Some people probably use a 60-minute chart, whatever the case is. I just showed you, say, price broke structure, right? So to me, price was making lower lows and lower highs all this time. It turned back around and broke structure here, back to the upside. So I'm still probably looking for maybe having a bullish standpoint or bias as of right now until we break this area down here, okay? Now this is going to be breaking support. Right now it's a pullback to areas of demand off the 60 range chart, which we're tapping into right now. You can see this area down here. This is a block for demand. I'll show you, and this is how I would actually trade it. So if I was marking this area right here, this is actually demand resting right here at the bottom of this leg, okay? This leg right here. So price pulled back to it. It's tapping into it. It bounced off of it. Why? It's bouncing because it's a major area of support, a major area of demand. And again, I trade supply and demand, okay? So, and looking at my 60 range chart, I'm saying to myself, okay, the market's it's still a little bullish right now, whatever the case is. Even though we got this bearish move to the downside, making lower lows and lower highs, it still has not taken out structure right here to me, okay? This low right here. And until it does that, I'm still going to be looking for maybe long entries, right? Okay, so that's how I look at it. So right now, I'm bullish more so than bearish in a sense, even though probably from a short-term basis, I'm not saying that you can't look for opportunities to go short if price pulls back to these areas up here, because then you'll be back where? Areas of supply. But right now, we're tapped into this area down here where price was pushing up higher. It was pushing on the 2nd of October, was breaking and moving higher, taking out resistance right here. So if it's doing that, which means taking out structure, if it's doing that and it's pulling back now to the same areas where price was making these higher highs and higher lows, I am looking for possibility to go long until we break this area here, okay? So So, and then, you know, the lower the time frame that you get down, you're probably going to start seeing to where, you know, if you go down to, if you're trading the 60 range chart still, not trading on the 60 range chart, guys. What I'm trying to say is that if you use the 60 range chart, it kind of give you a bias in the market. Like I just showed you on the daily, the 60 range as well is showing me that, okay, the market is still kind of bullish. It hasn't broke structure down here. Still looking for longs. Until it kind of shows me something else, I'm still going to be going or looking for opportunities to go long. Now, a lower time frame chart, if I scale down to my 12 range chart, now it may show me a different picture, okay? And then look at this here, yes, it kind of is. See the difference here? Price made a low here, made a lower high, made a low here, okay? So right now, we haven't broken this area here. And because we haven't broken that area, I'm still probably interested, because we haven't broken this area, say for instance, but because we're making these lower lows and lower highs, okay, at this time, I'm still looking for possibilities of maybe short entries in a sense, because we haven't broke this major area structure right here to the upside to me, all right? So if we haven't broken that area, then to me, it's like, okay, the market's not bullish yet, all right? But, you know, you have to kind of see what's going on from the higher time frame and kind of moving down to the lower time frame to kind of, you know, position yourself into it when you start looking for entries, whatever the case is. But higher time frame right now is telling me I should be looking for maybe opportunities to go long. I'm going to stick with that again until the market shows me and paint something different for me. Right now, it's just showing me it broke major structure here, pulling back, tapping into some areas where price was once moving higher. So I'm interested in going long until we probably break this area right here. All right. So that's kind of the game plan of what I do is always start off with my higher time frame and then just kind of scale down to kind of see. So once I get down to my 60 range chart and I see the market is still, to me, in the areas of where there's opportunity to go long, I'm going to take those long entries, okay? I'm going to look for long setups. We hit demand right here. So this is where now I'm going to show you how you can, you know, pretty much how I actually use the strategy I do to trade each and every day once I kind of depict market direction in a sense. Right now, I'm still looking for longs, again, until price breaks structure back below this area here. Now, what I do is I always start with a higher time frame chart, okay? And I'm not saying that you can't scale down and look for areas of supply and demand because you certainly can do so. But the thing is that right here on the 60 range chart, say for instance, I see areas of demand right here because price is making higher highs and higher lows, and as it was doing that, it was breaking structure, right? It's pulled back to it. So I mark each area of demand. You know, as price is pulling back, I'm marking areas of demand. Price tapped into the area of demand right here, okay? And now that we're tapping into that area of demand, say for instance, as an example, what do I do then? Once you have identified an area of supply or demand on your chart, okay, now let's take a look at this because, you know, this is an example of demand sitting here, okay? And I'll show you an example of supply sitting at the on the 60 range chart as well, all right? But I like to mark my area of demand or supply on the higher time frame. For me, it's 60 range chart. For you, it could be a 60-minute chart. Or it could be a higher time frame chart. I don't know, a 2,000 tick chart or whatever, 10,000 tick chart, whatever it is that for you. I'm not sure. But for me, it's a 60 range chart. And at that point there, right here, this is around the 35, 85 area, okay? So that's down here in this area right here. Now, I know that this is the area, okay, because when price taps into it, this area right here is the same area in the 60 range chart. So, being that price is tapped into this area of demand right here, what do you think I'm looking for? I'm looking for price rejection at that point. That's all I'm doing. Once price gets to that area, I'm looking for price rejection. Okay? So price is tapped into that area. What am I now looking for? I just don't jump into a trade. Okay? Once price has, let's go ahead and mark this zone here so I can show you. So you understand. I'm gonna put it on all the charts. Okay? So this zone should show up on all the charts now. Let's see. Yeah, here it is, right here. Okay? Same thing you just saw the 60 range chart, which is the area demand. Now we see it on the 12 range chart. Why? Because all I have to do is wait for price to come back to that area. And then here's the second part of the strategy. Okay? First part is marking the area of supply and demand on the higher time frame chart. Second part of the strategy is scale down to your next level or to your anchor or entry chart. Okay? Say for instance, and wait for price to come to that area. You can do it like I did it. You can mark the zone off to where it shows on all charts. Once price taps into that area, then all I do is I wait for a structure break back to the upside, okay? Price right here. This is from 3 o'clock this morning, I believe. Here's the area of structure I need. I need price to break structure, okay? The second part of this of the strategy in a sense. Price pushes up. What does it do? It breaks structure here. Once it breaks structure, I immediately then mark a demand zone, an area of demand on my 12 range chart, okay? So let's remove this area now. Let's see. We'll grab it, move it lower. There we go. So now I want to mark an area of supply, demand off of the 12 range chart. It could be a 5-minute chart for you, okay? So maybe you're using a 60 range to mark your supply and demand zone, and then you are using the 5-minute chart to scale down and look for a structure break. So one, as I said, mark the supply or demand area off of your higher time frame chart. 2, scale down to your next level chart or your scale down to a lower time frame chart, okay? And then look for a structure break. Here, second part, broke structure here. You broke structure here, okay? Now all I'm looking for now is I need to draw my area of demand on my 12 range chart. So you're basically drawing, if you're trading off an area of demand, say for instance, mark it on the higher time frame, scale down to the lower time frame chart, look for the structure break, then mark your demand area on your 12 range chart or 5-minute chart, whatever it is. So we'll do that now, okay? Let's see. Okay, right here, I drew it right here. So all I have to do now is to wait and game for price to come back to that demand zone on the 12 range chart. Broke structure here, pushed up, made higher highs and higher lows, pushing higher. It retraces back, pulls back. Once it taps into this zone right here, to this demand zone, all I have to do now is wait for the rejection. Now, you can trade it straight off of this time frame chart right here, okay? In this case here, all you do is wait for a break of a candle, meaning wait for this green candle to close at the top end of the body of this red candle and take your long entry. What do you take your long entry back to? The aim of the goal is to take it back up to the high here, the previous high, which is an area of liquidity resting right above it, okay? There's money sitting there. So get into the trade here, break it. Like I said, a green candle breaks the body of the red candle, take your long entry, okay? So as simple as that. All we're doing is identifying supply and demand zones. If you don't know much about supply and demand, please learn supply and demand, because supply and demand is the cornerstone to my trading and how I actually trade using a simple strategy. As well as if you go online and research supply and demand, you'll find and see lots of people trade it. Because the primary reason, these are areas of aggressive buying and selling in the market, and these areas or zones are created by the banks and institutions they're the players in the market. They're the big players in the market that push and pull the market. You have to understand that, okay? And that's why when you see big moves in the market coming out of big swings, so price maybe made a high, pulling back, and then boom, breaks strong to the upside with aggressive buying. That's the banks, guys. They are filling orders and they're pushing the market in a certain direction. Or it could be a big swing to the downside, or whatever the case is, aggressive selling, okay? So we're looking for those areas on our charts. So mark it on a higher time frame chart, scale down to a lower time frame chart, look for the structure break, mark that area of demand in this case here, and wait for price to come back to it. As simple as that. Once price comes back to it, look for a break of a candle to the upside, take your entry long. Take a chance to go long, whatever the case is. Just make sure you're getting the full-on rejection. Wait, and price has to tap into that zone. Then once you get the break, take your entry long, okay? So that was an example there of actually how I actually trade using supply and demand, my own personal strategy that I devised that works for me day in and day out, okay? So we'll look at an example, say for instance, an example of supply in this case now. All right, here's an example. I'm gonna show you supply. Okay, so we see price made a low here. It breaks back, pulls back, makes a low here, okay? Then what it does is it starts swinging to the upside, making higher highs and higher lows. Again, I'm marking the area of supply off of my higher time frame first, okay? So it's making higher highs and higher lows. Excuse me, on the move to the upside. It breaks structure right here, and it closes this green candle. Breaks above here, this area here, all right? So it made a high here, all right? Pulls back, makes a higher high, okay? So we got a high, a higher low, and a higher high here. Then price pivots, turns direction, breaks back down. What does it do? It takes out structure right here, okay? This little swing right here, swing area right here. I'm gonna move back to the downside, price breaks out, takes structure out. So what do we do at that point there? All we wait for now is what? For a pullback, go ahead and mark the zone to this area right here. Okay? All right? That's supply now. This area right here is now supply on the 60 range chart. Now, this is from September 27th. Let's go to that time frame, okay? To the area on the 12 range chart. Now, what we do is we've already accomplished, fulfilled first step, finding the area of supply on, or marking off an area of supply on our higher time frame 60 range chart, okay? Now, let's just add it to all the charts, say for instance, so we can see it on our 12 range chart, which is our lower time frame now. 27, this was around this pullback to this zone. Price tapped back into that zone on the 60 range chart, which is this supply area here, around 11 something on the 27th. So let's go to the 12 range chart. Okay, let's see, 11 something. Where we at? Okay, so right, it's this area right here. Okay, all right. So price taps back into that area. All right, same area right here that we see here. This area right here, this 60 range supply area is, excuse me, this area here we see on the 12 range chart is the same area that we just marked off on our 60 range chart or higher time frame. So I guess it's like 10:45, 11 o'clock, something like that. But then this area on this pullback right here, price taps back into that supply zone. All right, so we'll go to the lower time frame now. All right, so we tap into it right now. Okay, so what are we waiting for now? We're looking for a structure break. Okay, to the downside. All right. Okay. So what do? Now that we fulfilled the first task or the first step, price pulling back to that 60 range supply. It could be on a 60-minute chart, whatever your higher time frame is. Okay. All we look for now is a structure break. Structure break meaning I want to see price break below an area of support or structure. Okay. So price made a high here, pull back, made a higher high, pull back, made a higher high on this move to the upside. Here's a little swing right here. Okay, so price breaks this little area of support here, or swing area, or supporting structure on the move right here. Okay, once price does that, I am immediately going to now mark an area of supply on my 12 range chart, which is going to be this zone right here. Okay, right there. Now, all we're waiting for now, the third step is price to pull back to the zone. Once price pulls back to the zone, we're looking for a break to the downside. Price pulls back to the zone, okay? Almost to the tick right here, all right? And all we're looking for now is a red candle to break below the body of the last up candle or last green candle to the upside, which was this candle right here, green candle right here. The moment price breaks below it, I am short. I'm looking to take my short where? Back down to an area of liquidity or the next low, okay? And that's going to be this area right here, all right? So I go short here, okay? The break of that, the body of that green candle, back down to this area here. So if you got in, say for instance right here at 37, 09 and a half or 10, something like that, take the trade on back down to the bottom to 37.03, 37.02, somewhere down there and pick you up. Several points, whatever the case is. All right, that's a lot of ticks in that small little move right there. Okay, so this is trading the ES. You can do the same thing no matter the market. It doesn't matter if it's the micros. Doesn't matter if you're trading any commodity market, options, stocks. It doesn't matter. Just simply pair charts together. Trade areas of supply and demand. Step one is the market area of demand or supply off of your higher time frame. Scale down to your lower time frame chart, which could be your entry chart, okay? Use that chart. Wait for price to tap back into that 60 range for me, which is my higher time frame. Could be a 60-minute for you. Tap back into that supply demand area. Once price does, scale down to your lower time frame chart, your entry chart, okay? Then, once you see that, all you're looking for is a structure break either to the upside or downside, if you're trading demand or supply. Once you get a structure break, then mark again. Then here's where you mark another area of supply demand on the lower time frame chart. Wait for it to pull back to that zone. Take your entry once you get the rejection. It is simple as that. This is a very simple strategy that you can use as part of your game plan. As you're going about, pre-session, looking at your chart to kind of devise a direction of what the market may be trying to do. Stick and trade within that actual direction, whatever the case is. Look for those areas of supply or demand. So if the market is say for instance bullish, then you're going to want to be looking for demand zones to mark. Okay, if it's bearish, then you're going to want to be looking for supply zones to mark. Okay, and so forth. Okay, as simple as that. Just try to move in the same direction of what the market is moving. Again, if it's bullish, look to be trading going long. Bearish, look to be trading going short, or whatever the case is. If you trade in the direction of the higher time frame, okay, then you should be okay. You should definitely be profitable, be successful each and every day, as long as you're taking and following the steps step by step. Okay, I have tons of videos on the channel discussing the strategy, discussing how I use it. You can see me use it in my own live recorded sessions. And as well, I mean, we have traders in the community on Discord that can vouch for it, that, you know, kind of been learning it and watching the videos and incorporated it into their own trading, their own trading themselves. Now, I'm not an educator, I'm not a teacher or instructor or anything. I just simply trying to share the information that I know and how I actually trade in my own life, my own personal life, and share it with you guys. I just feel like that's the best way to get back to people in a case, you know, sharing something that you may know, passing it forward. So, I have tons of videos on the channel that you can watch. You can join our Discord community just as well. Find the link down in the Discord, up for the Discord down in the description portion of this video. Just look down in the description portion of the video, click on the link for the Discord, invite yourself in. It's free. And that's pretty much it. You can join us each and every day on the Discord, where we talk about, you know, primarily the MES or the ES future markets, the E-mini S&P 500. But you know, it's an environment for all future traders who want to come on board. I'm sure most people who trade futures at some point are trading some or one of the indexes, you know, whether it's the NASDAQ, the Dow, the S&P 500, you know, as far as the future market. So join us. I mean, we talk about levels and zones. You know, some people share strategies as well. So it's just a good, wholesome group of traders that come together collectively. We talk about the session, the markets each and every day. So come join us. Find the link down in the description portion of the video below. And that's all I have for you guys in this video. Take care, and I'll see you in the next one.